What's going on, guys? Trade to Bless here. We'll do a quick recap of kind of today and how it worked out, what we saw pre-market, and kind of what I was acting on, and then we can learn about some technical analysis and some things you can maybe plop on your charts that would make navigating the markets a little bit easier, possibly give you some locations that make sense and all that. So this is, again, 4-hour chart. If you've been watching the last couple of videos, I made things a little bit simpler to see, I think, by adding some of these imbalances. There's a fair value gap indicators that they will plop up on your charts, and then once they get inverted like this, then they will close up, right? Obviously, this one has not been, right? Nothing has closed through it, right? So it's still open, and then this one was inverted overnight, over the overnight session, over the weekend, I guess, after the move up on Friday. This was the move up on Friday during the market, and then the grayed out area are the after hours stuff that's happening. I thought that would be a little easier to see, some place that you can, some ways that you can clean up your chart so that you can see it a little bit easier. I don't tend to use all these things, but I figured if it's easier for people to see, why not use it? Obviously, it's something that I keep track of. I just don't always put them on my chart, but I've started to change my charts to make them cleaner for everybody to notice what the heck I'm seeing, and it'll make it cleaner for me as well. What else you're seeing here? This is the 15-minute range high of the day, or the opening range, 15-minute opening range low of the day. And then these golden lines are points of interest on a footprint, kind of volume footprint chart, and I'll show you on the 15-minute chart down here. So this is the 4-hour chart. What before the market opens, what am I thinking? Obviously, we're still in this imbalance here that never got inverse, so I'm thinking that we are bullish here. That we're still doing that, but overhead we have this that completely negated and inverted this imbalance here, and we actually closed towards the lows back in the same area. So a bit of neutral. I was thinking more like if we got into here, we maybe look for some potential shorts in this imbalance after the bullish open down here potentially. So really depends on how quickly the market rallies up into something, right? Like, so the time that something gets into something, it matters. It's not just where it goes, but when it goes there. The volatility at the time it gets there and all that. So it's not, if you're following somebody on the internet that's telling you, hey man, do this, if you do this every time, then you'll be good. And it's like, well, you're going to have better opportunities if you do some things consistently, but also you have to have your screen time to know in the first 3-5 minutes of the day, 10 minutes of the day, depending on how volatile the market is, it may not respect some of those levels that you thought it would. And then later, as the market settles down, the volatility contracts a little bit, it might respect those levels a little bit better, right? So here, the market rallied on Friday, completely lost all of it over the weekend, and then it respected this bullish sentiment, but it does have this to deal with. And so that's kind of what I'm looking at before the market even opens. We're here at kind of like an area where a buy would make sense. But then, at what point do I want to take risk off the table? Again, if I have retrospect, like if I can fast forward and then go back and trade after I see it, obviously I'm going to make different decisions, right? But that's not how it works. We don't have hindsight as a benefit. So that 4-hour chart at the beginning of the day, I'm thinking if we get somewhere in here, maybe we can get long. Once we get up here, maybe look for some shorts, especially having these points of interest and value areas from previous days. So then we go to the 1-hour chart. Obviously, you can see what happened for the day there. Right, somewhere right there. Same thing, right? Where is it? Right. The market rallied on Friday, right? And then lost all of it, pretty much the entire move. And then again, same kind of vibe. It's like hanging out in here. Now, on the hourly chart, it did inverse this bullish imbalance. I did close it, but you can see after the open, and we don't really spend a whole lot of time right there. Once we open, we don't spend much time in this area, and we just kind of shoot straight up. And I'll show you on a smaller time frame as far as what that might look like. Would there have been any trades? And I tell you right now, I did not take any trades in the first 3 to 5 minutes of the day because the market absolutely ripped in one direction. But anyway, so we were thinking from the 4-hour chart, we're kind of opening in that area where there was imbalances towards the lows, and then there was a higher area of imbalances on the high side. So it's kind of like which one do we do? Do we short up here, or does the market hang out here for a little bit and then give us an opportunity long? Again, the timing of it is part of it. It's not just the location. Location and time are both very important in being successful as a trader. Other things that I've added to my chart so that you can see it as well. Of course, I have the 15-minute, gaps or whatever. I think it's a little bit noisy. I might remove those. It's just a little bit too much. But I have these kind of like value areas based on volume profile here from the different days, and there's session profiles. So just this day, right, is on that profile. What I'm interested in is where is the value area, and I'm looking at 40% of the day, right? Like, so the highest 40% of the day was here. Now, most of the time when you plop this on your chart, it'll kind of default to, I think, about 70%. I think this one defaulted to 68%, which is about the same on a lot of platforms. I reduce it to 40%. It gives me a little bit cleaner, right? Like, so if I have this value area, if I have this value area here, boom, and I have it here, boom. As I get a rally into that area, I can expect some sort of pullback, maybe a potential short if it's combined with other things that make sense. Same thing here. I have this value area. You see, like it's high. It's like a little bit denser than the other color, and then this is more muted. So that 40%. If I have a pullback into that area, then maybe I can get long. If I have a rip into a value area up here, maybe I can get some kind of short, something that makes sense. Again, you want to look at multiple things for confluence, but those are good areas where you should see some reaction. It gives you an opportunity to get into a trade and possibly get risk-free sooner than later. Again, I'm not the person that does 100-point trades. I am happy to take 10, 15, 20, 25 points out of the market and move on with my life and look for the next trade in an area that makes sense at a time that makes sense. So again, here's a 15-minute chart. Obviously, we have some imbalances below the having closed. We have a new imbalance from today, but you can see the market pretty much open and ripped. And I'll show you on a 1-minute chart. It's a little bit easier to see. Market opened down here, made essentially the low of the day immediately. And then ripped for the next. There's a 1 minute, 2 minute, 3 minute. We ripped pretty much immediately. As we get into this area, which is what it happened to be the 15-minute high of the opening range. If you look to the left, there's definitely areas there that would make sense for this thing to have at least some sort of pullback. So there was trades there. And let me go back to the green line is going to be the same on every chart, right? There you go. So you can see the beginning of this value area, right? The beginning of this value area. The 40% of this day where the most volume was is kind of at the same area where you can see a little bit of a pullback. So you position yourself based on previous data where people were really interested in trading the market. You position yourself to get in there where other people have been interested before. If you imagine being long, right, in here, imagine having bought in here, and then the market does this overnight and you have this position. What do you think you will do when you get a pullback into that position? Now, unless you're a longer term investor and you're like, okay, well, I'm in where I want to be. Maybe you just, bought some more overnight or something like that. Or maybe you bought more at the open or something like, depending on what you're allowed to do. But if you're just a regular trader, you're like, oh my gosh, maybe I have a contract overnight. I thought this thing was going to rally because it had such a big pop, throughout the day on Friday. I thought this was going to maybe gap up or something, or just kind of hang out at the highs and then take off. So when you see this opening all the way down here, you're likely to start peeling off or getting rid of your position as you get to that break-even area. So that's the sort of thing I'm looking for. Now, normally I would also be looking for this value area to do something. And was there some reaction? Sure, but we're talking like very, very quick. And also, because this happened in the first 2 minutes of the day, I am less likely to think that this is going to be as precise an entry, because the volatility could and often does in the first couple minutes of the day not respect things, to a degree that I'm happy with. Like, do I want to slip 30 points past that area, 25 points past that area, when most of my trades are 15, 20, 30 points? So I am better off waiting until the market starts having some stability, maybe after the first 5 minutes, like you see the candles get a little bit smaller, the volatility contracts a little bit. And so I can look for things in here that I'm happy with, maybe on a sweep of the high of the day there. I can maybe look for that kind of position. There's another sweep there, and maybe I can look for that position. At some point, you go, okay, if this thing is super bullish, do I then buy a pullback for a move higher into the next point of control to the left, right? So essentially, that's how I worked out my day. Things that I look for, I thought maybe this will be helpful to somebody that's trying to set up their day and have like higher probability types of trades. Something like this when, the market just rips and rips and rips and rips. People will make videos saying, well, I have my crystal ball. I know this thing is going to rip all day. So I bought that little bottom tick and I saw that very high tick. That stuff is not true. That stuff is not real. And so you have to be okay with taking your chunk at an area and at a time that makes sense and then moving on with your life, right? So the guys that are telling you that they're bottom taking and top taking stuff, that's just not real. I mean, you might get lucky from time to time, but the truth is you're looking for high probability area at high probability times where you might see a move in the direction you anticipate. You grab that chunk out of the market and then you move on to the next trade. I hope this is helpful and I'll see you next time.